We're going
Now,
straight.
you know, one thing that has changed are the bid-offer spreads on Nadex on their spreads.
Let's cover that.
Yes.
Perfect. Go for it. Because they have some more market makers going in there, right? So things are tightening up.
They grew 50% year over year from first quarter of last year to this year.
Yeah.
And so the demand has grown just by traders. So that brought in more market makers, which are also liquidity providers.
Sure.
And they added a regulation basically to help encourage the market makers to tighten up the bid-offer spread, and it is working. I'm looking at the NASDAQ right now. We're talking 2 ticks wide on an option.
Yeah, we just pulled it right up.
Which is fantastic.
Yeah.
If you go look at NASDAQ options, they're going to be wider than 2 ticks. And on Nadex, though, on the Nadex spreads, you get 2 ticks wide, and which is fantastic. I mean, it's usually 1 tick. And what I want you to understand on 2 ticks is a big thing, is a tick on NASDAQ is 0.25, right?
Yes.
A tick on Nadex is 0.1.
That's
so
cool.
if you're getting 2 ticks wide, you're getting 0.2. You're getting a tighter bid-offer spread than you would get trading on the CME.
Right. That's pretty intense, man.
And that adds up.
Yeah.
And way tighter than you would on the options. But I mean, even tighter than the futures right now on NASDAQ. You're getting tighter bid-offer spreads.
Well, it's what's wild is that when I say it hasn't changed, meaning I'm selling something.
Right. No, yeah. No,
I haven't. No, and I love that we're talking about these spreads because it's the first time that I sold the NASDAQ in at least like 3 weeks, maybe 2 weeks.
If you say so.
So
you want to go over your trade real quick, just because we didn't quite cover it as you were. So you got the 80-point spread, right? Let's see. So about 9:58. Looks like you were getting prepared for your 10 o'clock update in the minute prior to it. And where are we at 9:58? Yeah, we're right up here in this bar. So that's nice. Right before you got a little downward action. It looks like you got in at 5,072.90. Now that's the one that goes from 50.20 up to all the way up to 5,100. And yeah, that's not too bad in terms of, you're getting in at 50.73, let's call it. And the market was trading at about 50.77. So it looks like about 4 points in premium.
Right.
But that's not bad when in reality, I mean, you're risking 27.
It was 263.
That would make sense. Yeah, give or take, 270
per
for like 530 on profit. Right. So of course you're gonna be paying a little bit premium, but on a day like today, 4 points in NASDAQ premium for risking 230 to make 570. That might be a good play if it ends up working out in your direction. Which right now it's working out okay.
And another, what happens, folks, is that many times I like to trade near the top of the box also, and I didn't take the 40-point spread, because it was near the top of the box, but I felt that I had to give this thing breathing room out here, and I didn't want to.
Explain that a little bit when you say give it why?
Well, the top of the box, what would also happen is that
you could have done this one, right? Is that what you're looking at?
That means that I have to absolutely have it close under this 50-80 level.
Okay.
I'll lose everything. Yeah, right.
I got you.
So it's.
I got you.
We'll see where this shakes out today.
One of the big things to remember too on NASDAQ is the spreads are a little narrower from high to low.
Yes.
And just like on any option, you get more premium as you get closer to the floor or ceiling. So it can it gets close to the floor or ceiling a little faster than the other indices.
Right.
So it is on Nadex, the NASDAQ 100 there is more likely to have a little bit of premium in it than the other indices. So if some people are looking for like no premium, they're probably going to want to look at some, like Russell or the Dow or the S&P.
S&P, sure.
Yeah.
If they want a little bit of premium, which I like the premium, but it's a little more advanced play, but they can hop over on the NASDAQ. So
that's great. That's great information.
But it can move a little slower with that premium, which can really frustrate people. They don't understand that NASDAQ has a little more premium in it because the spread is narrower as far as a percentage basis from high to low.
I mean, we talk about it. What a great time to go over there, download the demo account, even maybe put some real money in there, whether it's $100, $200, just to get acclimated. Because I anticipate we'll see a little bit of volatility in the next few weeks.
Which adds premium, which is a great way to make money just on time.
Yeah, where you're starting, that's where you can get a feel for how that premium works, where you really see the markets move, even if you're not trading it, you're at least aware of, okay, this is how it's moving, this is how the premiums are reacting to the move. Then you understand it, then you're comfortable enough to actually put money at risk.
Right.
Yeah, and once you click on if you go to tfnn.com and click on the Nadex banner there, once you get to the Nadex site, then under trading platforms is where you can get access to the demo trading platform for free.
Perfect.
Yeah.
So right there, I'm showing that up on my screen just in case they show that. But yeah, so it's sort of oscillating right there. It's oscillating right off of a half deviation level.
Okay.
So let me move my NASDAQ chart, and I'll put it on the screen here. So hopefully that's showing.
There we go.
And,
We got you.
Yeah.
Yeah, and so we're up literally hit like right on the half deviation, which is 50.77.75. Not surprised to not see it full deviation yet, with the anticipation of the swearing speech happening at 11:30. He's supposed to go around, do a little bit of visiting, and then he's like, I'm going back, to the office. So who knows? Like, I expect that we're going to hear news out of that office today.
Okay, we'll see.
Because the stuff I was
Anything's
reading
possible.
was that
I was laughing.
he was saying he was going to cut it short, I mean, for whatever you want to play why he was. But he said he was going straight back to the White House office to pass things today.
Yeah, no, that would make sense. I mean, his mantra was day one, right? In terms of, so for sure.
So I think he's going to do some real day one stuff. Like it or don't like it, whatever, it's still going to be happening, and it's going to be adding volatility. And so he'll be turning down executive orders,
right?
And
no, for sure,
approving things that Congress is going to throw on his desk as far as the budgetary things and the fees and fines and all that of Obamacare that I know that they've been working on already. So it will be an interest. It's going to be fun. I mean, it's going to add.
I was saying last week you should expect the unexpected. You said something like, I didn't expect that or something. I said, man, you shouldn't be expecting anything. You should be expecting the unexpected. For sure. Just keep that awareness that at least for the very near term, where we really don't know what's going to happen, because everything's just been talk up until this point. And I agree with you, Darrell, for sure, but we don't know. We don't know what's going to come on day one. We really don't.
Exactly.
Yeah.
We should probably see a little slow down, just for those who are riding the short down right now, around 50, 59. That's the deviation of volume from yesterday. And then the point of control is settlement. So that's why, that's going to be a massive magnet today. That's where the highest volume was yesterday, and that's right at 50.53. So I expect to see the market drop a few more points without too much work, and about 10 more points without too much work. And then it'll have a little battle there and decide whether it wants to continue on down to like about 50.42, or decide to pop back up and play a little bouncing game between that and that half deviation at 50.77.
It's really just going to be interesting to see what happens as.
So let's see where we're at here. This is pretty cool. It's not that.
So you get two contracts, and it looks like, so you got in at 50.72.90.
Yeah.
So you're already 7 points down from where? Yeah, that's nice.
Yeah. And so with two contracts, you get about $145 in profit. And hey.
And the cool thing is that I got the 80-point spread. That's a big,
And two contracts equals one future. So.
Yeah, and I could get 80 points today. That's only 40 points from where I'm going.
1.5% of the index to put things. We know that's capable.
Right, totally.
For sure.
So I want to highlight one more time just these bid offer spreads. I am loving this.
Yeah.
So what's we pulled it up? Is it, and it's really just across the board, right, Darrell?
Yeah, across the board they've got a lot tighter, and basically you have market makers tripping over each other to get those fills. And I mean, there are 2-3 ticks, which what that means as a trader is the market has to move less in my favor for me to be getting a profitable position.
Yeah, for us,
the spread's important, man. It is, because especially if you're trading quick, right? If you want to get in and you get out, you're getting the spread on both sides, so you got to be aware of that.
Right. I mean, when you're talking a 2-tick bid offer spread on which is really less than a full size tick on a future, I mean, you're literally talking the market can move less. Can literally move a tick and you can be in profit.
Yeah,
I know.
And you can see, we were looking at it, right? So you have one market maker. It looks like that they're putting in bid and ask sizes of about 20 contracts on each side. Looks like you have one market maker that's doing 17 contracts for their bid offer. And as those get straddled on different sides, they're squaring off, and you can see how fast this thing's moving right now.
Yeah, here's the depth right there. If you open an ADEX ticket up, you can do top or you can do depth. And if you do depth, you can see like who's competing against each other and all that stuff and what's up, and so it actually lets you see exactly what you're talking about, Tommy.
Yes, right. Then that's exactly what we're looking at, right? Where you can see, and so you can see, you can kind of pair off which market maker is the bid and the offer, and it's not the same market maker making that bid offer spread with 2 ticks. What's great is you have market makers competing with each other, and that's where the spread gets tight.
And you know what's going to be cool, folks, is that normally when us as an individual, when you get in the middle of them, they would never move. You could sit there for a bit, okay? So it's going to be interesting to see what happens when you get in the middle of these. Look at this. This is turning into that's 1 tick.
I was going to say that's
crazy.
The only way to get in the middle of a 0.2 tick spread is to get 0.1. So
that is intense, man.
Yeah.
That is.
Isn't that fantastic?
Yeah. That is over the top, man.
It's about as close as you can
I
get.
hope all you Tigers are listening to this that trade futures, because
Seriously.
This is unreal.
You're basically the market maker. It's as close as you can be to it without even,
You're getting better bid offer than on the CME.
Yeah.
Wow.
Yeah.
That is freaking intense.
For active traders, that's a big deal.
Oh, it's everything, man.
Exactly.
You kidding? That's like unbelievable.
Yeah.
And Nadex, a lot of people don't know this. I keep up with every notice just because I trade it for a living. And but they actually passed a rule for their market makers, incentivizing them, sort of penalizing them if they make their bid offers too wide. So incentivizing them to keep them smaller. So it's sort of a cool regulation. It's like, hey, let's keep this marketplace fair, and let's keep it competitive, and let's make it a true marketplace. And
because everyone's going to win there as order flow increases.
Well,
it's not a big deal that
they have enough contracts now that the incentive that the market maker is enough bread, even at a tick or 2 ticks.
Sure.
You know what I mean?
Sure.
Yeah, and as a trader, I'm like, why would I trade a future when I can get a better bid offer and actually be in profit faster?
Right.
Just doing it right here. Yeah. So and it's actually a little bit cheaper. So because I'm paying 90 cents a side, 2 contracts equals 1 future. So you're talking $1.80 a side, 360, and I mean it's pretty hard to get a 360 round turn on Nasdaq at just about any broker.
Yeah.
So that's actually a really good,
So
total cost.
So let's walk through this. It's amazing actually, because when you actually walk through it, for all the folks that trade futures out there, you know that you still don't have defined risk either. It's like, okay, hold it. My spread's tighter. I'm trading the exact same product. I have defined risk, and it's cheaper. It's like, okay.
I agree.
That is
Sold,
cool.
Man. Sold.
Now, it's wild, Darrell, and folks.
Now you just need the market to fall out of bed. But go ahead.
Well, hey, listen, for bulls and dogs.
I'm kidding.
I agree.
I am.
But now, I remember when this happened in the equity market. And it was a field day, okay? Because we'd go from, like, we used to buy a stock.
Quarter point, right?
Yeah, immediately we're losing from $125 to $250.
I was going to say,
you
trade 1,000 shares at a quarter point spread, you lose $250 to get in, and guess what? You want to get out? That's another $250.
Okay.
And now it's 1 penny.
Yeah, unreal. Yep. And as Darrell, Tommy, and myself, we've been talking about the tightness in these spreads. Test drive it so you can see exactly what we're talking about, particularly if you're futures traders, because the bottom line is that
and you want to get used to everything. Even during the break, we were looking at, Darrell, what you were looking at, which was, I think, the 50-20 versus 50-60 spread, and that one right now is super tight with 0.1, 0.2, and then you jump to the 80-point spread, and sometimes that's jumping around a little bit wider just from how the market makers, and I said, the market's going so fast right now too, I think with news that's going to oscillate. But you just get used to everything, and you jump around. Those contracts and how they work, and that way, depending on what you'd like, right? If you're making a really quick trade right now, depending on what you're bearish, you'd want to make sure that if there's another spread with a tighter spread in it, you're in that spread. Right?
This is where, big time. Because if you're going in,
because right now there's a 0.6 spread actually in the bigger one.
Yep. And that's only 2 ticks in the 40-point one.
Right.
So if you're going in for 10 points, 5 points, go for the 0.2.
And then, tying things even further, though, guess what? This one's right at the top, so there's a lot of premium in here, whereas this one is actually trading dollar for dollar right in the middle of the 80 points, so that's where you got to weigh the good and the bad.
That's pretty wild.
Yeah.
Darrell?
I'm here.
There we go.
Thank you. Sorry.
Okay. I was wondering. So, and then we went right to the tick. Remember I called that 50-59 level?
Yeah.
And I said there's going to be a battle right there. And so, we went to the tick at 50-59.
And so that was the deviation level, right?
It wasn't a deviation. It was the high of basically what's called value area.
Okay.
Where the 70% of the volume is contained in that area. That's on the high level.
Okay.
And so right tick of that, and I'm like, okay, it's going to go there. It's going to battle a little bit. Then it'll drop down to settlement. It's going to break through that because that's where the highest volume was yesterday, the highest volume price.
Sure.
And then if we can break through 53, then I mean we got to drop right down to 50.52. So we're just waiting on it right now just to do its thing.
The battle's on.
Everyone's waiting, man.
The battle's on,
Everyone's
baby.
waiting.
Let me see.
And if you're a scalper, like with these tight spreads, you can scalp with them now.
I know.
So that's another dynamic. And this is where you scalp. You scalp where these battle zones are.
Yeah.
So when I'm like, hey, it's going to battle at 50.59, it's going to battle at 50.53, like that's where you want to go in. And I mean, if you're getting 2 tick wide spreads, I mean, all you need is a few ticks up. You're profitable, like by $60.
Yeah,
if you got say 10 contracts, a couple ticks. I mean, you could just literally trade off of a few ticks and hop in there and get in, get out, get in, get out, and actually take advantage of those tight bid offers. Because I mean, that's scalping really needs tight bid offers for it to work.
You can't be paying a spread going for small margins, right?
And before the spreads weren't a great scalping tool. Part of that because it's a bid offer.
Yes.
But now that they actually are competitive, then you can actually use them for scalping. Now, if you're gonna scalp, a word to the wise: make sure that you're using ones that have what I call proximity, really tight proximity.
Okay.
Which means that they're trading their bid and offer is right there where the bid and offer of the underlying market is.
Right.
So, the market right now is at, say, 50.63. You're looking at a spread that's priced, within a few ticks of 50.63 because it'll move really fast. And so not only do you want that tight bid offer, but if you're going to scalp, you want a very fast-moving spread.
Great point.
So,
Great point.
Yeah. You don't want to have to worry about the market moving and then the spread being slow on the uptake.
Right. Scalping is not a premium play.
Right.
It's a get in, get out. No time involved. You're trying to just grab your few ticks and move on. So just keep that in mind that they're about the same price. Otherwise, if you don't know, then they have to move a lot and you're not able to scalp.
Nice.